Hi CTKS family, and welcome to the new viewers. I'm Ken, the inventor of the CTKS method, the world's most powerful smart money buy and sell level detection system. In this video, we're going to read the top news stories first and to separate signal from noise, then look into the key charts with target levels that professionals use. If you like this kind of content, please smash that like button and subscribe. All my chart indicators are available through the CTKSMethod.org service, and you can learn the CTKS method via the certification or the masterclass. Let's run the numbers. In other headlines, a Wall Street giant has suddenly declared crypto winter over as ETF hype pushes Bitcoin over 35,000. And the price of Ethereum and XRP soar. The Wall Street giant is none other than Morgan Stanley. According to Reuters, the ProShares short Bitcoin strategy ETF, which allows investors and traders to profit from a fall in Bitcoin's price, hit record lows on Tuesday, on growing optimism that the launch of an exchange-traded fund ETF tracking Bitcoin is imminent. In the crypto market, there was widespread optimism with the BlackRock ETF spot Bitcoin approval. But this is not actually what happened. I put out this tweet on Twitter/X yesterday. BlackRock secured a cusp number for the ETF. That means it could seed it with money. This didn't mean the launch was imminent, but it's a typical step when gearing up for a launch. It's a really positive development. CoinDesk has now reported that the ticker for BlackRock's BLK Spot Bitcoin ETF IBTC was removed from the Depository Trust and Clearing Corporation's website. If you're following the news on any website, please make sure that the news is balanced. There's a lot of people who simply want an up case or a down case. What you need is to separate signal from noise, and there's so much noise out there. The U.S. Court of Appeals for the D.C. Circuit has reaffirmed its prior ruling directing the SEC, the Securities Exchange Commission, to review Grayscale's investment proposal to convert the crypto company's leading GBTC fund into a Bitcoin exchange-traded fund ETF. There's an immense amount of interest inside the crypto market. One thing to note, these big companies don't like paying top dollar for their Bitcoin. They prefer to pay bottom dollar. Most Bitcoin mining stocks except two have outperformed Bitcoin by more than double this year despite the ongoing bear market. The average return of the top 11 public mining companies this year is more than double that of Bitcoin, standing at 148.59%. Marathon Digital Holdings and Cipher Mining lead the gains with 120% and 356% year-to-date gains. There's a lot of money to be made in the crypto space, and it can be made through the stock market, as well as directly in the crypto market as well. If you're liking the content so far, please smash that like button, and if you're not subscribed, please subscribe. You'll find there's information here that you will not find anywhere else. Inside financial markets, everything impacts everything else. Iranian-backed militias mount new wave of attacks as US supports Israel. Tehran appears to have ended an undeclared 6-month truce. This is good for gold, but bad for global GDP growth. As I mentioned in last week's video, threats of a widening war are really problematic, and Anthony Blinken warns Iran of a decisive response if Americans are attacked. Blinken, the Secretary of State, had the remarks, "Israel has the right to defend itself, but the way it does so matters." The death toll on both sides are mounting. Financial waters are always chopping. Surging interest rates are added to the list of threats staring down the US economy. Bull markets are said to climb a wall of worry. If you're waiting for the economic system to become okay and all fine, you'll be waiting a very, very long time. That is, forever. A much better approach is to simply understand price is always moving in a wave. It's going up and it's going down. It's a wave-based function. Inside Canada, confidence among businesses and consumers is eroding. Analysts say evidence that higher rates are cooling activity, and the Bank of Canada is expected to keep rates steady. It's expected to do its easing policy in early 2024. Meanwhile, in market news, the earnings season is heating up with Microsoft and Google parent Alphabet set to report. Microsoft shares are up 37% in 2023, beating the S&P 500 and the Nasdaq Composite. Xi Jinping steps up economic aid with new debt issuance, the People's Bank of China visit. The bankrupt firm FTX is negotiating with 3 bidders to restart the failed crypto exchange. FTX's administrators have so far recovered about $7 billion in assets, including $3.4 billion of crypto. It has a valuable customer list of more than 9 million customers. Keep your eye on the FTX token. Looking at the main markets and masterclass students, you get my live chart in TM6. The blue line in the background is Bitcoin's price action. We can see Bitcoin has been going parabolic. The one thing that we want to see for a follow through in the main market, and this is the Nasdaq, we want to see the VIX, the fear gauge of the market, and junk bonds, the risk on or optimism indicator inside financial markets. We want to see junk bonds coming up and the VIX coming down, and we're seeing that at the current time. I mentioned last week that I believe the bond market was in capitulation mode, and we've seen an incredible turnaround in both yields and bond prices recently. Increasing conflict in the Middle East will drive gold prices higher, something to be aware of. The thing that we noted in yesterday's video, structurally, the DXY came down to a very strong structural support base, and what has it done since? It's bounced like a Super Bowl. People who have been inside financial markets for decades understand that today's news story explaining a price drop is the same concept that explains price rallying the next day. This just simply means you can't trust the news. Well, at least you can't make purchase and sell decisions based on it, because a lot of it is just noise. What can you trust? You can trust your charts, because your charts tell you the truth. This is actual reaction. With the CTKS method, the world's most powerful smart money buy and sell level detection system, we mark up a chart's price history, all of it. And then when we look at the DXY, this is in excess of 20,700 days. What we noticed yesterday was the DXY broke down and then started to consolidate. It's since rebounded. Can the CTKS method explain this? When we pop on the monthly service indicator, yes it can, and very effectively. What we saw inside the DXY structure, and you must understand the DXY if you're trading or investing, it's critical. That 106.24.42 level was very, very strong resistance. Failed to support, became resistance again and again. We had 2 levels of structural support. Remember, these lines are actually accounting for in excess of 20,000 days. They're not just recent support lines drawn between 2 points randomly. This is a standards-based process. What happens when an area loses structural support and there's a fresh air gap down to the next areas of confluence? It can fall, the price can fall very, very quickly down. And that's exactly what we saw. What do these particular structural support levels mean? This is where price gets caught and would seek to be rebounded, at least to test the lower boundary, but we've seen upper boundary strength because of the Hamas-Israel war widening. This is why it's important to be aware of the news, but focus on the charts. A pro tip, You must look at a chart in logarithmic view. So many people look at arithmetic charts. It just shows that they don't know what they're doing. As a former lecturer in first and second year statistics, every time I see somebody analyze a chart in arithmetic scale, my skin crawls because they're misleading people. That misleading occurs not because people are deliberately trying to mislead, it's just because they don't understand mathematics. What we saw in the euro-dollar pair, as the DXY strengthened, the euro-dollar fell through its own fresh air gap, and you would know that if you had the monthly service indicator. Bitcoin is currently $33,770. It's done very, very well. And if you tuned in yesterday, I explained that this area from 35,183 to 36,025 was very, very strong structural cell areas of support. This was marked up through approximately 5,100 days worth of analysis through the CTKS method. It is revealed when you pop on the indicator, but the concept is what happened with Bitcoin's price. In yesterday's video, Bitcoin was pretty low. It was nowhere near this upper boundary. But with good news and positive momentum, Bitcoin can really skyrocket. But it stopped short of that 35,183 mark. This is to be anticipated. This is exactly why we do the CTKS method, so we can predict and divine the future. It's going to take some time to break through this particular area, especially as we're seeing DXY strength. Please let me know in the comments what's your anticipation of what Bitcoin could be doing next. One thing to be very aware of, the crypto market is a very risk-on and risk-off market. It's one of the most volatile markets on the planet, and that's why we love it. The crypto market has never decorrelated from the stock market. This is something people confuse time and time again. They've heard someone say, "Oh, crypto's decorrelating from the stock market. It's an independent market." No, it is not, and it never will be. Not even the bond market is separate from the stock market, and the bond market dwarfs the stock market. Having been inside financial markets for more than 35 years, I've pretty much heard it all. But the key is you must look at the structural levels. When we looked at the S&P 500, we noted that there was incredibly strong structural support between 41.61 and 41.92. When the S&P bounced, everything went positive, including crypto. A lot of people simply don't understand the intercorrelations and interdependencies between markets. Perhaps it's because they haven't studied and done a finance degree. I don't know why. As I am degree qualified in finance, I can help you to understand a lot of associations that people without a finance background simply won't understand. With the indicator on, you'll know exactly where structural support and resistance levels are. What we're seeking to see right now for a positive follow-through inside the crypto market is the S&P 500 futures to trade upwards, because the S&P 500 is closed right now. We want to see a reading of 42.75 to 42.92 or above. That would give the green light to crypto keeping on its positive momentum. It's very important to be aware of the structural support and resistance levels, and that is total market structure, or CTKS structure, of the Tier 1 charts. The Tier 1 charts are the engine of financial markets globally. They're so critically important to understand. The Tier 2 and Tier 3 charts help us to cross-triangulate or stack probabilities. I've shown you 3 of the Tier 1 charts, the S&P 500, the DXY with the indicator on, and Bitcoin. One thing to really be aware of, you need to have your 3-dimensional risk management on at all times. 3-dimensional risk management is simply the practice of knowing what you will do if price goes down, goes against you, goes nowhere, gets boring, or goes in your favor, goes up. With the majority of people going long, this is a fairly sensible recommendation. You control the trade or investment, but the market always controls the return, and you can't force the market into giving you what you want. Instead, your learning becomes your source of earning. And your mastery of fear, your courage, allows you to stay in the market when everybody else is fleeing. Without analyzing the CTKS structure on the Tier 1, Tier 2 and Tier 3 charts, you'll be consistently mystified as to what is happening inside financial markets. We see, by applying the CTKS method each and every day, we saw that the S&P 500 bounced from that structural level of support. So too did the DXY. Bitcoin was coming up to a structural level of resistance. It failed. And we saw the fresh air gap in the euro and the fresh air gap upwards in the DXY impacting and stacking probabilities as well. All of these charts matter. If you would like 27 TradingView indicators that give the CTKS structure that you can overlay on each of those 27 charts, you can join the service at a heavily discounted Halloween special rate. This rate is just plain spooky. And the coupon code is Halloween. Unfortunately, what most people do is they do not analyze the market pulse. They have the wrong process. They only analyze the charts that they're putting money into. This is a surefire way to lose money. Why is that? Because you can't tell the way and direction your chart is heading unless you know the market pulse. To know the market pulse, you must understand CTKS structure, which is based on price reality, not story-based analysis, and we never do recent indicative price. If you see someone looking at a chart saying, "Oh, I drew this line and it exactly matches the current price," you know that they're creating a story from recent indicative price, and you'll RIP your money. Because it's your money on the line, you must have your foundations. You need to look beyond the charts and be able to collect probabilities. Find the market's focus, but before you buy and sell, and there's so many ways to do that, mastering emotional control, especially fear, is vital. This is the structure of the CTKS Masterclass. The Masterclass will teach you the standards-based process to draw up the CTKS method. I'm so incredibly proud of the dedication and commitment of the Masterclass students to take themselves out of Zone 1 and Zone 2 to get into Zone 3 and Zone 4. By embracing the Masterclass, you move into the professional area, but it's critical to leave Zone 1 and Zone 2 behind. As the CTKS community, we are dedicated and committed. We turn up even when we don't want to. We know that learning is earning. And we either win or we learn and never blame. We turn our losses into lessons and rules. And we always solve our problems with positive excellence. Have a great day or night ahead, my friends, and Kate and I look forward to catching up with you again tomorrow. Bye for now.